Hello and welcome back to Global Value. In today's video, we're performing a fundamental stock analysis of Waste Management Inc., ticker symbol WM. We're looking at Waste Management today as a subscriber request, as Waste Management has a reputation that it's a very stable and steady business, and as a garbage utility type of business, it potentially has the ability to really withstand a potential rough patch in the economy. So currently, Waste Management is trading for $161.18 per share. Over the last year, their stock price is down 3.5%. Going back 5 years, Waste Management is compounding at a rate of 14% annually. Over 10 years, they're compounding at a rate of 17% annually. And going back prior to the global financial crisis, over the past nearly 18 years, Waste Management has compounded its stock price at a rate of 10% annually. Keep in mind that they also pay out dividends. So currently, they're paying out a 1.55% dividend yield. So that dividend yield would be in addition to this 10% compounded annual return. So Waste Management is about $14 below their 52-week high. They're still situated pretty well in between their 52-week high and their 52-week low. They are a large business. They have a $65 billion market cap. So for additional background about the company, Waste Management ranks as the largest integrated provider of traditional solid waste services in the United States, operating approximately 260 active landfills and about 340 transfer stations. The company serves residential, commercial, and industrial end markets and is also a leading recycler in North America. The company was formerly known as USA Waste Services Inc. and changed its name to Waste Management Inc. in 1998. Waste Management was incorporated in 1987 and is headquartered in Houston, Texas. So for our fundamental analysis, we're performing the Select 6 analysis, taking a checklist approach of 6 standard financial metrics to come to a holistic and beginning understanding of waste management based off of their business fundamentals. So this analysis is still a work in progress and it's an opportunity to learn in public. It will continue to evolve and improve over time. So with that said, let's get right into today's analysis. Starting things off with metric number 1, we want their average return on capital over the last 5 years to be above 14%. So Waste Management earns pretty stable, pretty solid returns on capital that are in the low to mid-teens. There are 2 reasons we're looking for a 14% benchmark here. The first is that over the long run, over the course of decades, a stock is likely to return approximately what its underlying business returns, and these business returns are going to be captured here by return on capital. The second is that the average publicly listed business earns about a 7% return on capital. So by looking for 14% or greater here, we can potentially build in some margin of safety for ourselves based off the overall quality of the business being about twice as good as average. So over their last 12 months, Waste Management has earned about 15% returns on capital. So they have been rebounding from a low of about 11% during 2020. However, averaged out, Waste Management is earning about 13.5% returns on capital. So that's just very slightly below that 14% mark we're looking for. So unfortunately, this is going to be an X on metric number 1. Their returns on capital are solidly above average though, and that does seem to make sense for a business like Waste Management, where it operates as somewhat of an unregulated utility. You wouldn't want the business to earn excess returns on capital, but you would like to see them earning above average returns on capital, and that's basically exactly what we're seeing out of the business. Next up for metric number 2, here we're taking a high-level overview of the cash coming into the business. We want to see revenue, earning, and free cash flow growth over the past 5 years. This metric is all or nothing in nature. Either all 3 of these are going to be up for a check, or if even one of them is down, this entire metric will be an X. So over this time, Waste Management has grown their revenues by about a third. Their earnings are up slightly, growing at a rate of about 15% over these past 5 years, and their free cash flows are up by about 20%. So steady but modest growth here for Waste Management. All 3 of these are up, so this is going to be our first check on metric number 2. Metric number 3, here we're taking the perspective of an individual shareholder in the business by looking at Waste Management on a per share basis. So we're looking for earnings per share growth over the past 5 years. So we learned that in the previous metric, Waste Management has grown their earnings by about 15%. At the same time, they bought back about 6% of their shares outstanding. With their earnings up and their shares outstanding down, this is going to equal strong earnings per share growth that's better than either of those. So this is another check here on metric number 3. And this is important because when you purchase a share of stock, what you're really buying is a fractional ownership percentage in that business. And when a business buys back shares by decreasing the amount of stock that they have outstanding, they're really increasing your ownership percentage in the business without you having to lay out any additional money. So it's similar to as if Waste Management were making a partial acquisition of itself. And so this means that they're increasing your ownership percentage of the business and also increasing the percentage of the business's profits that you're going to be entitled to. So just like with any other acquisition, we want a company to be buying back shares when those share buybacks are going to be value acquisitive for existing shareholders. So you'd want to do more due diligence to understand that in deeper detail. But again, this is another check here on metric number 3. So far through our first 3 metrics, we are 2 for 3. Metric number 4 is going to be very similar. Here we're looking for free cash flow per share growth over the past 5 years. Again, their free cash flows were up and they bought back shares, so their shares outstanding are down. This is another check on metric number 4. It's good to see that their earnings and free cash flows are on balance roughly the same, and given that they're earning above average returns on capital, coupled with this modest growth in their earnings and free cash flows while also repurchasing shares, it would appear to be the case that Waste Management has been able to increase their intrinsic value per share over the last 5 years. So doing this is really one of the ways that compounding is able to work its magic, especially if they're able to maintain this over extended periods of time. This is potentially a sign of the strength of Waste Management's business. Next up for metric number 5, here we're evaluating how the business is utilizing debt. We don't want to be investing in overly levered businesses because during economic downturns, it's overly levered businesses that are going to be at the greatest risk for poor outcomes. So we want their net debt, which is long and short-term liabilities minus cash and short-term investments, to be below the amount of free cash flow that they produced over the past 5 years. It looks like Waste Management has increased their debt loads by quite a bit from 2019 to 2020. They ended last year with $13.8 billion in net debt, and currently they have about $14 billion in net debt. And over this time, Waste Management has only produced about $9.8 billion of free cash flow. While their cash flows are below the amount of net debt that they have, and this is going to be an X on metric number 5, this higher debt load may not be as much of a concern for their business, especially given the nature of their business. You would want to dig into the company's filings to learn more about how this debt is structured, what are the rates that the debt are at, and when do they mature. Waste Management will break out some of the details in their filings. And so again, even though this is an X on metric number 5, this potentially may not be as much of a concern, especially given the nature of their business compared to some of the other companies we've looked at. So to recap so far through our first 5 metrics, we have 3 checks and 2 X's. Our 6th and final metric, the big metric of them all, we want their average free cash flow to their total enterprise value to give us a yield that's above 5%. If this is the case, this will give us a slight risk premium to the rate of the 10-year treasury yield and potentially give us another reason to be interested in Waste Management. So we're using their total enterprise value here because it's going to give us a more accurate picture of the business's economic reality than their market cap will alone, by taking into account both their market cap and their net debt position, and painting a picture for us that's more similar to as if Waste Management were a private business. So currently Waste Management has a $79 billion total enterprise value, and we learned that over the past 5 years, they produced just under $10 billion worth of free cash flow, meaning that in an average year, they're producing about $2 billion worth of free cash flow. So when we divide their $2 billion worth of their average free cash flows by their $79 billion total enterprise value, that gives us an average free cash flow to enterprise value yield of approximately 2.6%. That's both below that 5% mark as well as being below the rate of the 10-year treasury yield right now. So on an average basis, this is going to be an X here on metric number 6. Also worth noting is that over their last 12 months, Waste Management has pretty much produced about the same amount of free cash flow as they have historically. So their current free cash flow to enterprise value yield for the business is basically the same here. Just because this is an X here on metric number 6 doesn't mean that you're going to throw the business out in its entirety. It just means that the business's quality may be more fairly valued and appreciated by the market overall at current prices. However, this metric is just 1 out of 6, and this analysis is meant to be taken in holistically. Then here we're looking at Waste Management's dividend profile. So currently Waste Management is paying out a 1.55% dividend yield. And again, they have the reputation of being a reliable and steady business, especially during potential recessions. So if you're potentially considering this business in part for its abilities to pay out dividends, you don't want to make the mistake of blindly chasing dividend yield or blindly chasing a dividend track record. Instead, you want to slow things down and do what we're doing here to look at the underlying fundamentals of a business and to determine whether or not their dividends are well supported by that business's cash flows or earnings, depending on the type of business. For Waste Management, we want their dividends to be well supported by their cash flows. So in all 5 of these years, Waste Management has increased their dividend payouts, and generally over this time, they've also grown their free cash flows. And so in all 5 of these years, it looks like Waste Management has had more than enough cash flow to be able to comfortably sustain this dividend. So while this is a snapshot of the past 5 years and it's not any sort of guarantee for the future, if they're able to sustain their cash flows and keep incrementally growing their dividend, it would seem that Waste Management's dividend profile would be in healthy shape going forward. Then finally, here we're using a discounted cash flow model to come to a potential fair value for Waste Management. So starting with an average of their free cash flows over the past 5 years, and then using historical growth assumptions based off how Waste Management has been able to grow their free cash flows over the last 30 years, So assuming a growth stage for their free cash flows out over the next 10 years at a rate of about 6% annually, then using a terminal stage for the business for the 10 years out after that, so projecting 20 years out into the future in total, where their growth falls to a rate of 4% annually. We won't be including their tangible book value because that's skewed based off how the accounting is done for their share buybacks. Then if we were seeking a 10% rate of return from Waste Management out over the next 20 years, it looks like a potentially fair value for the business would be about $66 per share. So that is less than half of what their current stock price is trading at. Using these same historical growth assumptions, it looks like you'd only be able to expect about a 1% rate of return from Waste Management going forward. So this means that their stock price would actually be decreasing over this time as they are paying out a 1.5% dividend yield. And so that would be included in this discount rate. Please be aware that this analysis is not financial advice. It's not a buy or sell recommendation of any security. And before considering any potential investment decision, please consult with the properly licensed and registered legal and financial professionals. A discounted cash flow model is just like any other type of model in any other discipline. Its outputs are going to be sensitive to its inputs. We're using historical inputs that you need to do your own due diligence on to determine whether or not they are potentially accurate and applicable to give us a baseline projected estimate for waste management going forward. This analysis is not set in stone by any means. It's up to you to learn more about the business to determine whether or not this would be potentially reasonable for waste management. So in summary, Waste Management checks the box on 3 out of 6 of our metrics. They're earning returns on capital that are just below that 14% benchmark we were looking for. They've experienced modest growth in their business, growing their revenues by a third and increasing their earnings and free cash flows by 15 and 18% respectively. They've also repurchased about 6% of their shares, so on a per share basis, they've experienced this modest growth as well. Then, although it potentially isn't as much of a concern given the nature of their business as a somewhat unregulated utility, it does look like they're employing a bit more debt in their business than we're necessarily comfortable with. And on both an average and a current basis, their free cash flow to enterprise value yield are not giving us the adequate risk premium that we would ideally be seeking in comparison to the rate of the 10-year Treasury yield. Looking at their dividend profile, they've been able to incrementally and modestly grow their dividends over the past 5 years, and in all 5 of those years, their dividends were very well supported by their cash flows with plenty of breathing room, which is probably a good thing as hopefully they're allocating a lot of their cash flows to paying down their debt. Then finally, performing a discounted cash flow analysis of Waste Management, which again are based off these historical assumptions that you need to check and verify for yourself. If you believe those assumptions, then if you were seeking a 10% rate of return on Waste Management going forward over the next 20 years, you would want the business's stock price to fall by more than half. And from today's valuations, it looks like the business would pretty much be flat from here on out. It's worth reiterating that this type of analysis is not financial advice, it's not a buy or sell recommendation of any security, and it's up to you to do your own due diligence before considering any potential investment decision. Instead, this analysis serves as a beginning and holistic understanding to help you determine whether or not it's worth your time and energy to dig in and learn more about waste management. One resource that will definitely help you stay up to speed with what's going on in the market and help you learn more about the business is Seeking Alpha. Checking out Seeking Alpha directly supports the channel as I'm part of their affiliate program. So most of you probably know Seeking Alpha as a source of community written articles on different stocks. But over the past little while, they've actually become a lot more than that with their new offering, which is Seeking Alpha Premium. Premium has a number of different features where you can track buy, hold, and sell ratings on your favorite stocks. These ratings are from the Seeking Alpha community, Wall Street analysts, and Seeking Alpha's algorithm. You can see earnings call transcripts, investor presentations, SEC filings, and press releases all in one place. You can add your own margin of safety targets and get alerts for when your favorite stocks hit that level. You can get unlimited access to Seeking Alpha articles, and you can tailor your reading experience based on the type of investor you are. You can get 10 years of financial data on any stock to help you with your analysis. You can also import your portfolio into your Seeking Alpha dashboard to make researching easier. And if that didn't convince you, the best thing is that an annual plan is only $99. That's only 27 cents per day through my referral link down in the description below. Normally, premium is $239, but they are currently running a general offer for $119. But if you use my link, it's only $99. So check it out if you're interested. As a value investor, you're ultimately trying to conduct this deeper research as if you're going to own 100% of a business, and you can truly understand the underlying essence of that business and understand what's important and what's not important for that business going forward. Through this deeper research, you'll ultimately learn about both the qualitative and the quantitative aspects of waste management, and you'll likely be able to come to a potentially appropriate and reasonable approximation of waste management's intrinsic value. So with that said, that's it for today's fundamental stock analysis of Waste Management Inc., ticker symbol WM. As mentioned, Waste Management is both known as a countercyclical business that pretty much held up very well during the last recession, and it was a subscriber request, so I'm happy to make an analysis of it today. So if you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about waste management with me, and have a great day.